That's. I've actually never met him in person. Let's keep this going.
Come on, I got you to laugh, David. I got a smile out of you. But not Robert. Robert's just like stone cold killer over there.
The law firm.
This day in history on October 14th, 1994, Pulp Fiction opened.
Wow, that's a good one. That was a great year. You also had Forrest Gump that year, I believe, was the best picture in '94. Another great film.
How do you remember that?
Did you cry?
I mean, like you're a little sad at the end of Forrest Gump, aren't you?
Yeah.
Yeah, he looks really sad.
Yeah. The best scene in Forrest Gump though was when he returning kicks for Alabama though. That was, and he just kept running. Just.
I wonder how it holds up. I don't know if I'm committed to watch a whole Forrest Gump again, but I'd like to see if it holds up.
I bet it does, to be honest. It's it's a historical movie that it's a timepiece. I bet you Pulp Fiction holds up. Although, what kind of cell phones were they using? They were probably just using like street phones, I imagine, right? What were they using in there? I can't remember.
Maybe payphones.
That's a good story. Iridium. Do you guys remember the company Iridium?
Yeah, with those satellite phones.
Yeah, I remember business school.
My dad had one of those.
Well, they were $10,000 for the phone, and by the way, that's 1994 $10,000. So that's about $100,000 in today's money. And then it was like $2 a minute or something, something like absurd.
As a doctor, it kind of let him go out and still be on call. It was he thought it was amazing. But he hit a period. It was like huge.
He was like Jurassic Park phones, right?
He was like peas and carrots with that phone.
Okay, what's the joke, David? Go ahead.
Jenny and me was like peas and carrots. Quote from Forrest Gump.
I'll give you one from Pulp Fiction. Remember, she said, "No, I want to dance. I want to win. I want that trophy. So dance good."
Here's a hot take: Quentin Tarantino, a bit overvalued.
That is a controversial take.
What's his multiple, David? What's his multiple?
I would say he's at like a 37 multiple, and his earnings are declining.
No cash flow. Okay.
Well, he was always a terminal though. He said he was only going to do a certain amount of films, so you knew that it was never. It was never. Oh, speaking of guys who are in terminal.
At some point, even Woody. No, I do want to see it.
A total flop for Francis Ford Coppola. He financed it himself, and he did he sold one of his vineyards, and $100 million budget, and it's like I think at about $10 million in the box office right now. Not great.
What movie is that?
I have
Megapolis.
Oh,
I have a great. I'll tell it some other time, but I have a great story of how I met and had dinner with Francis Ford Coppola and the hilarious things that he said. But at one point, he was asking about should he sell his vineyards, because one's worth about $1 billion at the time. Another one was worth about $1 billion in real estate alone, and there were about 10 of us at the table, and he looks straight at me in the eyes and he goes, "What do you think?" And I'm not giving financial advice to Francis Ford Coppola. I mean, he owns $2 billion vineyards. What value add am I going to give? So I said, well, I said that. And he goes, no, I really want. I go, well, do you love them? He's like, yes. I go, do you need the money? He goes, no. I said, then why would you sell them? For tax reasons? Let your heirs worry about the tax things. Don't worry about that. Like, live your life. And he's like, I like this guy. He's 100% right. That's what I'm going to do.
That's great. So you had an impact on him, but I guess he ended up selling them anyway to finance his project. That now that money has been eviscerated.
So maybe David's responsible for this crappy decision.
No. I told him don't sell. But I did, like, again, he said that a bunch of vintners would sit around, because at this dinner, everyone was not everyone, half the people were very into wine. And so he would, people would taste the wine and they would give it human-like qualities. They'd be like, oh, this is a shy
like
wine.
Maris.
This is a shy wine that's very coy, and then pops out and says hello. And so finally he goes, when my vintner friends and I sit around, we never talk about wines like this. We taste the wine, we go, wow, that's really good. And then from that point on in the dinner, no one else said anything about like, oh, this is a shy or bold wine. Super nice guy. Horrible megatropolis.
We've got 16 seconds, so get all your giggles out now. It's a little stressful.
I'm the only guy here who owns the Johnny Depp movie. For a decade, I owned the Johnny Depp, Kevin Smith movie.
How'd you do?
Terrible.
All right.
Here
we go.
Movies
So
are hard to
it
answer.
is Tuesday, October 15th, 2024 on Wall Street Beats Live. I'm your host, Nadine Terman. Today we have David Early Harvest Maris, Ben Brey, Bob Morris, and Robert Marcin. We're going to kick it off with David, who's going to be talking about a few healthcare names, and I'm going to ask him about Walgreens since it's in the news today. But let us know what you're thinking about Bausch & Lomb, Bausch Health. What else you got here?
Yeah, so two deal-related stocks. First, on Bausch Health and Bausch & Lomb, BHC and BLCO. I've mentioned that I've been short these. I'm still short them, even though the news really looks like I'm going to be wrong on Bausch & Lomb, because they it's been persistent that most recently yesterday that TPG and Blackstone may be teaming up for a bid at around $25. I'll still be in the green at $25. I'll kick myself for not covering today, based on that. I don't know what they're thinking. This is a company that's the uglier, the uglier sibling of a very ugly family of Bausch & Lomb and Bausch & Lomb and Bausch Health. It's really, I don't know if they just have so much money committed from other partners that they need to put it to work by a certain time where they need to return it, or someone must have lost a bet to bid on Bausch & Lomb. Just look at the financials. They're barely making any money. You could make it adjusted cash flow or EBITDA or whatever, but the debt alone is a problem. So I don't see it as making any sense. But you can't fight the news. If someone stupid wants to buy something and take out one of your shorts, your better bet is to just cover and move on and just say, well, okay, that didn't work out.
So why aren't you doing it? Like, why wait? Why wait? Because you just don't think they'll do it, or you're just more like sticking your heels in the sand here?
A little bit of both, and that's the second half of that's always a bad decision, right? Because it's just money. It's just it's just a stock. And if someone stupid wants to buy something, they're not doing it to you. They're not. And if they're committed to doing it, I don't think doing more work, they're going to figure out, oh, they've already done the work to get it into the press.
Right.
Now, I happen to think that maybe there's a chance that they'll dig through this and go, wait a second, what are we doing? I also don't know if there's going to be a kind of a legal challenge, because there has been an argument that from the Bausch Health folks, that some of the shareholders, that you can't have an improper conveyance. You can't just move a bunch of debt from one company to another. They should be happy with this, but it's possible that they don't want to screw up their overall lawsuit. So I think there are a couple more shoes to drop, and I'm hopeful that they'll step away from this. Again, it's only been reported in the Financial Times, so it could also just not be true. Not to say that the Financial Times isn't a great organization, but it's being repeated other places, but not with sources. So, and then Pfizer. Not surprisingly, what's come out is a couple news stories of, hey, Starboard's taken $1 billion stake. They really have not much that they can do, because Pfizer's already gone through a cost cutting, and the CEO has kind of consolidated power with this. At first, the Starboard said they had the former CEO and CFO cooperating with them on trying to find ways to unlock value. And then they both came out and said, no, we believe the CEO is going to create value. And the idea, the news story is that somewhere behind the scenes, some lawyer called them both and said,
Yeah.
"By the way, you do
We're
this,
going.
and you're in trouble."
You're gonna
So
get sued. Yeah.
whether or not it happened, I just don't see it's hard to come up with something new for a company that big that's already going through cost cutting. So it's a super cheap stock. So Starboard played their hand right in that regard. A 5% dividend yield and a really low multiple. Not much of a future, but they're probably not looking out 10 years either. So
Okay. And what do you think about Walgreens here? Can you really cut your way into investor hearts? That's what it seems like they're trying to do. And today, I guess maybe they're winning on that. But more and more stores, what are they doing?
yeah, we had a couple folks on Wall Street Beats say, if I remember correctly, it was 2 or 3 weeks ago, said, "Look, I'm taking a flyer on Wall Street Beats, on Wall Street, on Walgreens Boots Alliance," and like, oh yeah, it's a junky company. They came out today, said we're going to close 1,200 stores, we're going to cut costs even more. One of the things that jumped out at me is that their free cash flow for the quarter was $1 billion, and that's great. 250 million of it is just from lower capex in the quarter. Their overall capex is like 500 million, $600 million. So or $1 billion. They cut capex pretty much in half. Oh, sorry. Their capex for the quarter was 250 million. So they cut 250 million from what would have been a $500 million run rate. Well, what were you spending it on that you can cut half your capex, and how? So essentially, they're just not building any more new stores, and they're going to close a whole bunch. This is going to be a multi-year thing. Is it cheap enough to say, "Oh, I'm going to do it"? I'm not interested in bad companies that are going to fix themselves. That's other people make a lot of money doing that. That's just I like growth companies that are cheap. This is kind of a declining story that is cheap. So. It's not my thing. They're doing all the right things they're supposed to be doing, which is, hey, we stink. Let's get rid of a whole bunch of stores. The core, just to be clear, the core problem is reimbursement at the stores. It's managing the stores. It's inventories and stuff. Those aren't just by getting rid of a whole bunch of stores. Maybe they'll be better at managing the ones they have, but.
You have to improve that. Yeah, it seems more of a systemic thing.
Yeah.
Well, thank you. Now we're going to move on to Ben. Ben, I know you were talking about your short on KinderCare before. So what's changed since the last time you reported?
Well, before I was talking about it as a pre-IPO, and you didn't know where it was going to price. You didn't know what their share count was going to be. They did a shoe. So they filed. I mean, they listed last week. They priced it at $24, which is kind of the low end of the range. It popped, then it got a little IPO flipping day one, and now it's up at $29. So I started shorting the stock yesterday, and I'm gonna just kind of like above $29. I'm just gonna sprinkle a little bit of shorts here and there. Borrows available. It's about 17 times. Next year and 18 times this year EBITDA. Just for reference for the listeners, their Bright Horizons is what they will direct you to as a comp, and that's 20 times. So then on next year, and so maybe it's about $1 or $2 per turn of EBITDA. So I guess if you were to say, okay, what's the risk here? Let's say they converge to that company, which by the way I think they're both ridiculously overvalued, but having that aside, it's the comparable math. That would be $6. Right. That would be a $35, $34 stock. So, I think that this should trade more. And I think it should trade more in the $15 to $19 range. So it's now, especially up here, it's asymmetric to the downside. And just for a reference, I mean, I found out a little more about the PE shop that own these guys or own still. They're Swiss. So there's something very wrong about the government shipping these guys $600 million and then it just them dividending it out and take it to Switzerland. I just have a very serious problem with the way this government runs. And but whatever, it's public now. They got 3.5 turns of leverage, so it's down from 6 times pre-deal. And again, just so everyone remembers, I published a note on this on our site, but this is a company that's received a huge amount of money for COVID stimulus over the last couple of years. So it
Right.
can't be surprised that these guys are selling them prior to the ending of that COVID stimulus plus the election. Now, I don't have a strong view on what happens, but Trump's pulled ahead, and Trump's clearly like trying to talk about government efficiency and cutting wasteful spending. And I think this $600 million just getting shipped to Switzerland is the kind of thing that will get the chopping block in a new regime of spending if that happens. So I don't know. I mean, it's an okay business. It's not like it's it's not a terrible business. It's an okay business. They got long-term contracts with employers. So but I think it's like a 10, 12 time. All the other education companies are like single digit. Now they don't have the contracts as much, so it should be at some premium to that. But I mean, 18 times for this is 17 times for this is ridiculous.
So it's a multiple point. It's the ending of call it the COVID related payments. And then in terms of when you could see this playing out, what other, time frames or events, are going to bring this down? Is it just like the market needs to go down in multiples?
No,
Decline, or like how does someone make money in here? Is just like, is it just more after the IPO things are selling down?
So that's
Give me
a
a
good
time
question.
frame.
Like always, it's supply and demand, right? So right now you have a low float stock with 24 million shares that's trading. Let's just say, the way these usually work is T Rowe or Fidelity or Capital take a huge slug of it. So that stock's not in the market. So you really don't have like a whole bunch of supply to come on the market. Right. So what I would say, the way these normally play out, is that this company, PG Partners out of Switzerland, that's the sponsor, they still own 80% of the company, 80% plus. Yeah. So the usual order of operations is that there'll be, and it doesn't always have to be the lockup window, but they have something in there where they have a lockup window.
Yeah.
But that's not an enforceable real thing. That's actually just so the company doesn't dump and ruin the stock, but the bank can let them do it. So let's say this stock goes to $33. These guys are going to be like, hey, let's do a secondary. I saw Michael Kors do a secondary extremely fast after their IPO in 2012 because it was like an up and to the right stock, and they just came in and they'll hit you with supply, and right. So then when that happens is when you can kind of get more convergence to true value as the supply and demand gets in line. Right now you're in a situation where it's a low float stock. And as we all learned the hard way from the meme stock extravaganza, you have to be a little careful. So like, I'm not going to make this some huge position, but I'm going to short a little and then I'm going to kind of sprinkle it and keep watching it and see how it goes and get more comfortable with it. But yeah, I have actually a short on now.
Okay. Well, thanks. Well, we'll keep in touch with you on this name to see, in terms of events, in terms of news, and obviously the liquidity aspect of the stock as well, like how that's playing out. So thanks, Ben. Now we're on to Bob. Bob, lots of news about oil. Is Israel going to target pipelines or not? What's going on? How does someone play this now that oil has kind of stayed up and sticky a little bit, but today down because of that news?
Yeah, so we've had two articles come out. Initially yesterday, I'd gotten a lot of questions about a Fortune magazine article that said that Saudi Arabia could open up the taps and flood the market with oil if other members didn't adhere to the quotas that they've established. And then this morning, the Washington Post came out with an article saying that Israel will not attack Iran's oil and nuclear facilities, which is really what's driven down oil prices here sharply today. To address the Fortune magazine article, I think that's more, if it is true, is more of a veiled threat by Saudi Arabia. I mean, you don't have huge non-compliance on the quotas they've established. If you look at OPEC Plus, the big violators really, who is it?
So whose
Russia.
cage are they rattling with that? Like who are they trying to whip into shape here?
I mean, if they're rattling anybody's cage, it's probably Russia, Kazakhstan. The other big out producer is Iraq. But it's not a huge amount. Iraq is by far the one above compliance. But there are a lot of countries that can't produce at their quota either. So,
Okay.
remember that the OPEC's committee, JCMM, had their meeting here at the beginning of the month to set policy, and they didn't make any announcement. They didn't say that they were going to do anything. And then at the same time, it was last month that OPEC said, well, this 2.2 million barrels per day of production cuts we instituted a year ago that we were going to start to put back into the market at the beginning of October. We're going to wait till the beginning of December because oil prices are weak here. So all their action has been to sort of be supportive of the oil price. So I really don't think that even if this article were true, it's a veiled threat. I really don't think that Saudi Arabia is going to increase output and drive the oil price to $50 a barrel. And the next OPEC meeting is December 1st. So that's what we have to keep an eye on. But I really don't think they're going to drive down the price of oil. But the other article, which is more important, which has really driven down oil today, is the Washington Post article stating that Israel will not attack Iran's oil facilities or nuclear facilities. And we came out 2 weeks ago when all this happened, and we said, look, we think that, one, they will strike their nuclear facilities. That's the first option. Then maybe the Revolutionary Guard bases or headquarters. But lastly, we didn't think that they would attack the oil facilities for, a host of reasons. And so this is sort of reinforcing our view on the oil facility side. And if they were to attack anything on the oil side, it would be the refineries within Iran, which would actually be barriers for oil because that oil that would have otherwise been refined within Iran then ends up in the global market. Right. So, it was interesting, too, that apparently Janet Yellen over the last 2 days sent a letter to Iran saying, hey, by the way, the output sanctions are still in place, even though they haven't been enforced. And Iran exports close to 1.7 million barrels per day of crude oil. She reminded them that there are still sanctions in place, which maybe, behind the scenes, I might guess that, Israel's not going to attack your oil facilities, but we can still shut off your oil if you don't behave.
Sure.
So
what do you do here with this negative news coming out? And then, on a positive side, there was a note out about La Nina, some more weather-related aspects to this. So what do you do here? With these
you did
names?
what I said last week. I was on a week ago, and I said I had then written out of the money covered calls and a portion of my EOG position, which I've continued to do that. And I can tell you right now, my big energy positions, EOG, Exxon, C&Q, and Chevron, I've got out of the money covered calls written on a portion of each of those positions. Now, I'm not doing that today, but yesterday I was doing a little bit of the January $40 calls on C&Q, which, again, if I can get 2 to 3% premium for 10% or more out of the money calls, given that I don't think there's a sustained spike in oil prices here, and more of the factors seem to be leaning on the bearish side, I'm going to do that on up to half of my position. I don't have half of my positions with out of the money covered calls, but I've got some out of the money covered calls in all my positions. I'm not doing anything today. I'm going to watch things today and sort of see how things move around on this Washington Post article. But, the biggest wild card is still on the geopolitical premium. Where does that fall out?
Sure.
And I still think there's some geopolitical premium. You've got the other thing is China. And, yesterday people were a little disappointed that there weren't more details in their stimulus program over the weekend, but I think that China still could come up with more stimulus or more definition around that to help demand there. And we do believe that Israel will retaliate against Iran. We'll see what form that takes. And again, we do not believe that Saudi's going to flood the market with oil. So I'm just sort of today watching things. I've already done what I would normally do to some extent in writing some of these out of the money covered calls on my overweight energy positions.
Okay, thanks, Bob.
Can I ask you a question? Can you frame the Guyana situation? Because, I've seen how we've gone from up to 600,000 barrels a day from essentially nowhere. Where can that go? Because that's obviously been the big, supply growth outside of the U.S. That's kind of really put a cap on this. Where can that get to 1 million barrels a day, or is it kind of where it's at now? I mean,
no, it's going to keep going up. It's going to go to 1 million barrels a day. I mean, that's just a huge resource. It could go 1 million barrels a day or higher. And you've got neighboring countries starting to explore there. It's all in the same base, and that's going to continue to move higher.
So
the U.S.
Go ahead.
No, I said the U.S. we're at 13.4 million barrels today. Currently, that's 1.5% above where we were a year ago. So again, U.S. oil production continues to slowly creep up. I mean, the U.S. produces basically around the same amount that Saudi Arabia produces now.
Yeah. Bob, I got a question. With all the volatility in the commodity, are you a buyer or seller of the stocks?
I'm still an owner. I'm holding on to my positions. I'm not chasing these. That's what I came out and said 2 weeks ago. Look, I don't want to chase them. I said then I was more inclined to write these out of the money covered calls. So if we get further weakness, then I may add back to some positions, but I'm looking more for strength to maybe add a little bit more on the covered call side of it. So I'm sticking with my positions. I'm not selling them, but I'm not chasing them here and sort of watching here in the meantime.
Thank you.
All right, now we're back to Robert Marcin and his wonderful picks. You've got a nano company for us today.
I'm sorry. I assume the assignment is to report in real time what you do, and this is what
I want to know what you're looking at, what you're doing. So I love that.
Unfortunately, a deep value guy or a low price growth guy doesn't have a lot to do with these days with the stock market so expensive. So no, I'm not buying Momo Heaven, the church. I don't worship at the church of what's working right now, like various investors
You're not
do.
in Nvidia this morning, or I guess that's down because of
I bought 100 shares. I bought 100 shares trying to jinx it, but it went up. So. So I fish around. I asked the independent investor relations firms, what's their best idea, and a guy told me he would set up a meeting with a CFO of a company called Northern Technologies. I don't know if they're in Wisconsin or Minnesota. There's no difference really, right? But
I beg to differ on that.
They're all swing states.
But the stock, I had never looked at the stock, and again, I've looked at thousands of companies in my career, so I was intrigued. And I bought a starter position last week at around $12. Stock was down from 20. It's hit 20 3 times in the last 6 years, and they make plastics. Maybe not a hot area, but they specialize in rust and corrosion prevention. So that's sort of the company's original product. They chemically treat plastic packaging to wrap fine metal parts and protect against rust and corrosion. So that was the original business. They have about 90 million in sales this year, 100 million sales in joint ventures abroad. They have the most interesting joint venture I ever saw. They take a 7%. They have 50% ownership, but they take a 7% royalty off the top, and then they split the net income 50-50. So right now they get a buck. It's a $12 stock. They get a buck a share in non-operating income from their joint venture, and then they piss it away over investing and overspending in the U.S. So they make 60 cents. That's basically what happens. But supposedly they've found religion. They've been through a very heavy investment period and CapEx period to support growth, and they're going to try to leverage the 15 to 20% growth financial targets that they put on their most recent slide deck on the street. So how do they get 15 to 20 when they've averaged about 10 for the last few years? They have two divisions that are about 35-40% of the company that are growing a lot. One is they've taken their IP and moved it into oil and gas. So they're protecting pipelines and storage tanks. And it's, according to the CFO, much cheaper, much faster, and a far better corrosion and rust protection than what the oil companies do now. And this is 60% gross margin business for them. Don't tell your companies, Chevron and Exxon. We don't want them to know that. So it's very lucrative for them. And then they have a compostable plastic business that's about 15-20% of the company. And that is growing over 30% a year. And there's just a lot of regulations on governments now changing the use of plastics, reducing the use of plastic, restricting the use of plastics, or forcing it to be compostable if you do use it. And they make products, but they really are more an R&D shop, and they specialize in blending resins for specific, and then they sell resins to their bigger companies that actually make products. And that business is small, but it's growing 30-40% a year. So they think
do they have IP? Sorry to jump in here, but do they have IP, or is this just such a small market that people aren't focused on it? Maybe talk a little bit about the competitive dynamics of their key areas.
At once they did have patents that protected things, but the patents ran out like 20 years ago, and their brand is in industrial America is famous. It's called Z-Rust. And, so this is a play on rust and corrosion and the recovery in the Rust Belt. in theory, right? But today, I don't know if the patents have been altered and updated and renewed. The core patents have long since expired, and they're working on their knowledge, their knowledge of the product.
So why doesn't someone just jump in and do what they do? Like how do they keep keep abreast of what their competitors are doing? Who do they compete with, and how do they stay ahead if their patents ran off?
Yeah, they have, again, it's a very small market, as you said, and there's
Right.
like Dow Chemical's not getting into this, and DuPont's not getting, companies like that aren't getting involved in this. Their competitors are more mom and pops that have taken the product, tried to copy it, clone it, and then offer it at a discount.
Okay.
So these guys are,
Would anybody buy this company, or what's your play on here? Is people are gonna, I guess, finally discover this company, or how do you make money in this stock?
Oh, yeah, so the play is it's just a fundamental new product and growth cycle. It's like a growth spurt.
Okay.
If the two divisions get traction and keep growing 30, 20, 30, 40%, and you get a crossover on the revenue growth versus the expense levels, they should have margins that are at least double where they are now if they were halfway competent in the profitability in the domestic business. So you take the foreign income, the joint venture income, you make the core business profitable. They made 60 cents last year. They're on an August year fiscal. They go 80 cents, a buck and a quarter in the next 3 years if they hit their financial targets. And as I said, for some reason, small cap managers like this idea when it's working because they have a penchant to drive it up to $20 every third year. So I'm thinking at a minimum, the trade is 12 to 20. But if they really do hit a new growth cycle with the two smaller business finally driving the revenue at the corporate level for the corporate reported numbers, I think, this could be something I'd want to hold 3 to 5 years for a trade bigger than 20.
And what could go wrong here? What are the things you're most worried about?
I mean, it's just, it's a small cap company with economic sensitivity. And in the core business, 50% of the business is related to transportation. And that includes trucks, all kinds of vehicles.
And is it the kind of thing that once you buy it, you're done, or do you need to replenish this? Maybe talk a little bit about that sales cycle or the usage cycle for their products.
Yeah, the product does wear out, expire over time. Yes, so you're using these for periods of times. They're consumables.
Okay.
The packaging.
Okay, go ahead.
So, but the risk, I didn't get to finish on the risk. There is a very big, obvious risk here. Since half of their business is related to transportation vehicles, most of that is internal combustion. And I asked the CFO, when you switch to EVs, what's the need for the product? And he said it's a 50% haircut. So as the internal combustion engine market changes to EVs, they only get half the revenue for parts that they would get from an internal combustion engine because there's so many more parts in the latter. That's a headwind that they expect to grow through despite, they expect to grow double digits despite that headwind. That's in their models. But I think this 15 or 20% growth target is very optimistic. I told the CFO, would he sell me an ounce of what he's smoking because it's really good shit when they put those numbers out. But if they do 10 to 15%, and I have a 12 PE, and they have some black magic here or IP, and they're growing a lot faster than the average company. I think the stock could be a 2x over 2 years.
Go ahead, Ben.
No, this is ticker NTIC, right? Is that?
Yep,
yes.
NTIC.
All right. So the only issue is here, like, how much do you drive the stock up if you buy it? It looks like it traded 1,500 shares yesterday. So
yeah, someday
you got to be patient, basically.
You have to wait. It doesn't trade quite by appointment. I think the average daily volume is in the 30 to 40,000 share range, but as I say before, my biggest position is a company called Bell Fuse, bought 2 years ago with $125 million market cap, trading $200,000 a day of volume, and today it trades millions of dollars of value, and it has a $1.2 billion market, $1.3 billion market cap. So
Yeah, no, I was just curious.
When you're right on these, it's challenging to get into these nano caps. When you're right and they're on the O'Neill top 50 list, you can get out no problem. Okay, when you're right on the fundamentals, you make a lot of money, and it's very easy to sell. If you're wrong, it's a challenge to get out. So you know what? You don't be wrong, or you be wrong with enough values. When the story changes, you sort of the story could fizzle, and I'll end up liquidating this over a couple of weeks because it'll just blah. It'll just go blah. The stock's down enough, cheap enough, at the low end of the range enough, so that if they muck up, I'll probably be able to sell around my cost.
Right.
I think we're going to end on that lifelong lesson that Robert gave us here, that just don't be wrong. Don't be wrong.
Just don't be wrong.
Anything more, Ben? You were about to say something. What else you got? Or are we going to end on that good note?
Let's end on a good note. It was fun.
All right. Don't be wrong, guys. That's it for today. Life Lessons here at Wall Street Beats, Tuesday, October 15th, 2024. And we will see you tomorrow.